Alright everyone, so welcome back to our investor series. Now today we are right on episode 4, so check out this content with us.
Wealth management and
Monthly installment at 1.88%.
how to select the right property to buy.
1 km. It's 1 km. Yeah, let me check. Alright, so today we want to talk about some of the important elements when you come to your first property purchase, which is what are some of the factors that you need to consider as a buyer towards your monthly installment commitment. Right, so as we all know, property purchase is a commitment by itself. It's one of the largest items that a person will buy in their lifetime. So I think it's very important to be prudent as well. Now let's have a look. So very firstly, before we consider what are the factors, let's have a look an assumed scenario, for example. So assuming you are 30, through your working years, you have now been paid a monthly gross salary as an employee at $8,000 per month. And assuming that you don't have any car loan installment at this point in time, probably because this is your first property, you want to make sure that you secure that property first, started to stay in it, or perhaps you want to rent out if you're still not married and staying with your parents. Then subsequently after the property purchase, then you might want to consider buying a car or something. So let's assume that you have no debt at all, 30 years old, earning $8,000 a month. Let's see, based on the TDSR calculator, how much can you loan to purchase a private residential property. Based on that, as a single buyer, technically speaking, if you have zero car loan installment, you can loan up to 1.068 million. And 1.068 million is the max loan quantum of your 75% loan against the total price of your property that you can intend to purchase. So assuming you have 25% down payment for this loan quantum, if I add back, you will be able to purchase a property in the range of about 1.35 million. So if you loan 75%, you need to loan about 1.012 million from the bank. And taking a max tenor of 30, this is your monthly installment, which is at $4,000 a month, assuming an interest rate of 2.5%. Now, what does this mean for you? If you earn $8,000 a month, is it then wise to purchase a property at a 1.35 million quantum and having an installment of $4,000 per month? I think importantly is that there are some factors that we all need to consider before you actually take that decision, and this is actually to encourage prudency, because investing in a property is a mid to long-term strategy. So it is actually very advisable that you do your sums correctly before you take that step forward. Some of the important factors that we want to look through, I think there are 6 very important components. So number 1 is, what is the kind of disposable income that you're comfortable to live with after you invest in a property itself? So the first portion is actually very important. And after you purchase a property, do you intend to actually have a car? Because if you were to have, then your monthly installment kick in, it could be like $700 per month or $1,000 per month or $1,200 per month, depending on what kind of car you're buying. Do you have existing insurance premiums that you actually need to service? And of course, fourthly, do you have a commitment towards your parents or towards your family and stuff like that? And I mean, everybody would definitely need to set aside a little bit of savings per month for rainy days, and of course, your necessities that you need to set aside for every month. I mean, you still need to eat, buy clothes, and your handphone bills and stuff. So I think it's important to consider what is the total amount of your personal expenses plus your personal savings and some of the investments towards your other investments and insurance premiums, and then decide whether is that amount of monthly installment for your property purchase suitable for your current pay status or not. Now, assuming back to that illustration, you're 30 years old, you earn $8,000 per month, you're single, you want to buy your first private property. This is basically your scenario. I mean, based on your age, on CPF website, based on what you calculated, you need to set aside $1,200 as an employee. So technically speaking, you're taking back about $6,800 cash every month. So assuming you were to buy that $1.35 million property, installment is $4,000. 1,380 can come from your CPF monthly from your ordinary account based on your current age, which means you have to top up about 2,620 in cash to service that mortgage for the monthly installment. So your disposable income would then come to be about a net of 4,120 for everything else, right? So based on that, you need to decide for your own personal expenses, will that be comfortable or not? Right, so on the next few episodes, we're going to come out with a few case studies and scenarios to see what would be the ideal range for buyers to purchase that you do not actually overcommit based on your age group, based on your pay status, and of course, based on your current family configuration. All right, see you on the next episode.